We start today's market talk. It is in the transition from investor pessimism to skepticism that emerging markets generate the best returns. There are four stages of a market cycle: pessimism, skepticism, optimism, and euphoria. Best time to buy is when investors are fearful and pessimistic, as this is when the prices are low and the foundation for a future bull market is laid. Now, how should the investors be positioned amid conflicting signals right now? In today's trade climate, with India facing 50% US tariffs, GST rationalization is a way of growing, shielding, and Trump proofing the economy. This is an acronym for GST, which we can use: growing, shielding, and Trump proofing the economy. So boost to growth will come from increased consumption. That is the base case. It will boost urban consumption, boost to FMCG companies, consumer durables, QSR, etc. I'll show you their charts as to what the market is feeling about them. Other beneficiaries should be autos, footwear, apparel, cement, housing, fertilizers, etc. But the response has been muted to GST2 from the market so far. So where did the reforms fall short? Firstly, in autos, all SUVs other than compact ones moved up from 28% to 40% slab. So there would not be much gains for the company, and now all of them are announcing the fresh new rates, where all of the gains have to be given back to the customers. The that is why I had written that day that the sustainable gains for in terms of autos would be to Mahindra and Mahindra and Eicher only. Apparel and footwear, only mass demand is boosted. This will benefit apparel cheaper than 20 rupees 2,500, where rate is slashed to 5%, but costlier apparel has moved up from 12 to 18%. Similarly, for footwear, products above rupees 2,500 will continue to remain in 18% slab. Then insurance. Presently, insurance companies premiums come with 18% GST. This allowed insurance companies to claim input tax credit. This now, once it is not permitted, this will hurt their margins by 5 to 7%, and insurance stocks corrected after that. Then non-alcoholic beverages were moved under 40%, that is sin goods. So Varun beverages also corrected. Now, what is happening is structural support to domestic liquidity, basically SIPs, pension funds, etc., is a source of stability and a downside protection for the markets. Investors are skeptical about sustainable earnings trajectory. Employment situation is complicated by US tariffs and new technology. FIs continue to be on the sideline, although domestic liquidity is supported. The SIP flows are increasing regularly. GST rationalization has put a cap on any serious downside in the market, but the upside isn't guaranteed yet. Since preliminary estimates suggest revenue shortfall of 48,000 crore due to GST rationalization, Indian bond yields have reacted positively. I'll show you this. So the bond yields were going up. After the GST cut was announced, the bond yields have come down because the impact on the fiscal is not much. Further rate cuts depend on food inflation getting impacted due to floods in northern India, because if the GST rationalization takes place, prices come down. So logically, the inflation should come down. So there was a hope that RBI would cut rates, but there is a emerging problem where there are a lot of floods, etc., in northern India, which could lead to some kind of food inflation. So that is a concern. So if we focus solely on earnings, FY26 earnings growth for Nifty is expected to be in high single digit, and current valuations, considering high single digit and uncertainty ahead, are expensive. Indicates possibility of a correction in current environment. Nifty range should be between 24,000 to 26,000. So accumulate well-researched ideas at lower end of the range. So this should be your positioning. You will get a lot of opportunity in this environment. What is happening is market is only moving on news. So I showed you this. Now the other problem is why FIs are exiting also is because the Indian rupee is depreciating. So it is now crossed that 88 level. And because of this reason, the FI exit is taking place. So now I'll show you the FI positioning, FIDI data. So index futures, they are short 1.91 lakh and they're adding to their short positions. They are short on call options and they have bought puts. So they are basically oriented towards the short side. The change which has happened is the professionals or the pro traders, they have bought index futures, so they have turned bullish. They have bought calls, though they have hedging by buying puts also. So they are indecisive right now, in between, but still oriented more towards the short side in terms of index positioning. Clients are full on bullish. Index futures, they got 1.31 lakh long positions, and in index options they have bought calls and they have sold puts. So they are the counterparty to the selling of puts or the buying of puts by the FIs and pros. In terms of monthly data, so if you see the Nifty has been moving between this range of 24,350 to 25,000 based on the change in the FI index futures position, which on expiry had come down to 1.69 lakh short position. Now it has come to 1.91 lakh, which is roughly 92% short positions they are having. Now coming to the US markets, US markets ended mixed as hopes of aggressive Fed easing were balanced with concerns about recession, as weakness in labor market was clearly visible. August jobs report showed an anemic 22,000 rise in non-farm payroll. Market is pricing a September Fed rate cut of 25 basis point with a small probability of 50 basis point rate cut also. So this is why on Friday the bond yields fell. So if you see, the bond yields have come to 4.07, 10-year yield. The dollar also declined, so it has come down to around 97 odd level. Brent crude on good supply and has also come down. There is no rally in Brent crude also. So it has come down to around 66 level. Gold rose, powered up and crossed $3,600 to an ounce level and is in a solid bull market based on the premise of rate cuts in the US. Silver also moved up. It touched that 41 ounce level. It has broken through this trend line of the rising trend line, and that will power this rally in silver. So better to be with these gold and silver right now if there is a rate cut cycle in the US is going to commence. Copper was nowhere, just declined less than 1% odd. Bitcoin also didn't move much because equities were not that enthused after the job data, because there are concerns about recession also. So the US markets can't decide that whether there should be a euphoric because there is going to be rate cut, or they should be down because there is going to be recession. S&P 500 though was up around 0.33%, but it is above the last support or the last highs. Similarly, Nasdaq, it got a boost from Alphabet after an antitrust court decided it did not have to divest its Chrome browser. So it was up 1%. One day it went up 10%, and Dow Jones was also flat, but above the last high. So the US markets are okay. And let's see how the rate cut scenario gets priced in. Coming to Indian markets, India VIX declined, has come down now to 10.8 odd level. So there is no momentum this side. So that is the reason why downside is not much. But the week was very volatile. Each trading session opened gap up or gap down, reflecting uncertainty in the market sentiment. index frequently reversed from intraday highs and lows, creating a challenging environment for traders. So Nifty ended the week positive, but so if you see the weekly chart, it's a bullish candle with a long upper shadow, which indicates selling pressure at the higher levels. Right? It was up 1.29%, but it got sold off at the higher levels. Coming to the daily chart, this is the declining trend line, and it failed to break that. It is somewhere close to 25,000. So after the GST good news, Nifty just failed to touch that and failed to cross that. So this 25,000 level is proving to be a resistance as of now. On daily charts, though it is above the 100 and 200 EMA, and the long-term trend is intact, it is oscillating between 20 and 50 EMA, pointing to indecision in short to medium term. All moving averages, if you see now, they are flat. So there is no upside or downside tilt to them. They're flat, indicating consolidation or sideways movement. So they are converging now. So there is no movement as such. The reason why the Nifty is not able to go up is because of banking and IT, which have highest weightage. Both are underperforming. So in my opinion, this low which was made of around 24,400 odd should provide the support right now, and resistance at around 25,000 odd level should be there. So it should move within this range unless there is a big news. On the hourly chart also, if you see, there was a big gap up due to GST news, but it declined from there, and after that it has been sideways, though it is above the 20 EMA on the hourly chart. So if you see here, on 18th August, there was a gap up due to GST. Now that gap got filled. Again, the market took off and then created a gap, and then that gap also got filled. So there is lack of momentum right now. Nifty Bank, similar candle, bullish candle with a upper shadow. So it failed to hold above higher levels, but it is below even 20 EMA on the weekly chart. So much more bearish. On the daily charts, if you see here, it is below the 20, 50 and 100 EMA. And daily RSI, if you see, is in the bearish zone. 200 EMA at around 53,600, 53,500 should provide support. It has been taking support moving along this line now for quite some time. Weakness is due to HDFC Bank and ICICI Bank, who are underperforming the Nifty. So if you see HDFC Bank, it is below the 100 EMA also. So it went below that. So it is in a weak zone, and I think it should go to around 930 odd levels. That should be the support. Now, similarly for Reliance, it is below the 200 EMA. So it was also not getting any kind of attraction, and it has been constantly trading below the 200 EMA. So it is again weak. What is happening is FIs are constantly selling in cash market as sentiment is weak, as I showed you, due to US-India trade issues, weak corporate earnings, depreciating rupee, as I indicated, and possibility of rate cut by Fed. So if the Fed cuts rate, then the US markets become very attractive. So in my opinion, a large and swift reversal of trend is unlikely without resolution of the trade dispute. Now coming to specific sectors, so if you see here, Nifty FMCG, this is a daily chart, it rose after the GST news, but then it came down. So it is now mostly flat at the same levels. It has been there since April now. So nothing much here, and it is consolidating. So don't be too enthused with FMCG names, whatever people may say, but don't be too enthused. Now consumer durables also, it went up. It has gone up above the 20 EMA, etc. But it corrected, and from the highs it has made in last year in October, and then in November, December, January this year, it is much below those levels. So till the time it trades above the 20 EMA, it is good. But this segment is also now selling off. It made a kind of a doji on Tuesday. So there is indecisiveness, but it is not clearly able to sustain high levels. It has already moved up from support. So better to be on the booking profit sides. Now the segment which is breaking out is Nifty metals. So from the declining trend line from last year's October, this is trying to break out. This is because the US dollar is weakening, and if the so the it will help the metal prices. So this is one segment which is in a breakout state. So look out for the stocks in the metals for trading opportunities. Autos again rose, but again could not sustain and then have come down. So let's see from where it goes. But till the time they are looking bullish with all the moving averages moving higher. Okay, so what I was talking about was sentiment today. Sentiment is a bit all over the place right now. Short term, there is a confusion, a deep sense of dismay. In midterm, inability to hold on to gains is creating a dent in the positivity of May-June rally. Bias is getting built on news flows. So every day you're seeing movement based on news flows. FI net index short positions are 1.9891 lakh contracts or 92% short positions, which I indicated, basically hedging against their equity long positions. Now, Midcap index was up 2.63%, so there was some traction in this segment based on domestic buying. Similarly, the small cap index also went up 2.49%. So these segment of the market did well. So the portfolios would have performed well, but better to be with the ones where the valuations and the earnings are supportive. I'll cover two stocks. First is Titagarh Rail Systems. It is India's leading private manufacturer of freight and passenger rolling stocks with 25% wagon market share. Backed by 4 integrated manufacturing units, the company has expanded globally via its acquisition of Italy's Firma and key joint ventures with BHEL for Vande Bharat trains and Ramakrishna Forgings for wheel sets. It is strategically integrating backwards into forged wheel and rail propulsion system manufacturing. So, because of the problem of wheels, it is now trying, along with Ramakrishna Forging, trying to make the forged wheels and trying to get into the rail propulsion system, which has got higher margins. The same system in which there are other companies also which are doing well, like Hind Rectifier, etc. In Q1 FY26, it secured 2,500 crore new orders, taking its total order book to 12,700 crore, 32% freight and 68% passenger. Its order book share with its two joint ventures stood at around 13,330 crore. So 12,000 crore is standalone orders and 13,000 crore is the orders with joint venture. 6,300 crore for wheel sets and 7,030 crore for Vande Bharat trains. Now, strong demand from Indian Railway, capacity expansion and backward integration into propulsion and wheel sets are set to drive growth. It delivered for 20%, 27% CAGR in revenue EBITDA over FY 22-25 and is projected to grow at 22 to 27% CAGR over the next 3 years, with EBITDA margin expansion of over 100 basis points and ROE, ROCE reaching 15 and 13% by FY 28. Now, what is the breakup of the company? It has got two major segments, freight rail systems and passenger rail systems. So where they make freight wagons, components, and they also have a part of shipbuilding, bridges and defense, etc. And passenger rail system where they make metro coaches, propulsion equipment, traction motors and components, and passenger rail system maintenance. Then they have made a joint venture with Titagarh Firma, Italian associate company engaged in manufacture of passenger train, metros, high-tech speed trains, train electrical and locomotives. And for the wheel sets, they have Ramakrishna Titagarh Rail Wheels Limited joint venture. Now, if you see, every quarter since FY24, they were doing around 930 to 900 crore to 1,000 crores, right? Regularly for 7 quarters. This quarter they came down 679 crores. So there was a major dip the revenues dropped around 24.8% year on year. So this was a concern. Now, if you see, they are increasing their yearly wagon production. Wagons are roughly 90% as of date of their revenues. So freight rail system contributes 90% of their revenue as on date, and passenger is still smaller. But though the order book is more towards the passenger system, so there is a steady growth in yearly wagon production. So they are reaching around 9,431, and they have created capacity now for 12,000. So roughly 1,000 wagons per month they should be able to make. Quarterly wagon production was improving, and end of the year it was reaching that higher levels. But last quarter there was a decline, so it has come down below last 7-8 quarters now. Order book, so if you see here, is more towards passenger rolling stock, so roughly 8,500 crore, and lesser half of it is freight rolling stock. And this is also, they got that one large order for 10,000 odd wagons. Now in their joint venture, for wheel sets with RK Forging, they have order of 6,300 crore, and with Vande Bharat is that large order of 7,030 crore. So this is how it is stacked. I'll talk about these things. What they are likely to do is, for regarding this Vande Bharat thing, first prototype is expected by September 26 of Vande Bharat sleeper train. It was a very big order of 23,000 crore order for 80 Vande Bharat sleeper trains with 35-year maintenance. But it has got delayed because change in design, etc. And earlier it was for 16 coaches, then it has been raised to 24 coaches, etc. First two train sets to be delivered by FY27, remaining by FY 32. And the delay is due to redesigning. So its good days are still far. Now, in terms of passenger train, Pune Metro has been completed. They got orders for Bangalore, Surat, Ahmedabad projects. Metro coaches, they have a current capacity of 25 coaches per month. They're trying to scale it up. As I told you, they have scaled up their wagon manufacturing to 12,000 wagons per annum. That is 1,000 wagons per month, and they are doing around 9,000 plus wagons per year till now. The delay because or the lower supply of wagons in this quarter was due to delay in wheel set supply from Indian Railways. The wheels are made by Rail Wheel Factory. They couldn't deliver, so they suffered. That's why they are doing backward integration into forged wheel manufacturing with RK Forging. They are the only manufacturers of aluminum wagons in India, and that should help their metro projects. I told you their backward integration. They are getting into rail propulsion and traction motors, converters, and train control and management systems, which are pretty better margin businesses. So if you see here, they are expected to grow their revenues by around 13% in FY26. They were flat in FY25, no growth in revenues in FY25. And because they are in that state of transition now, and they have added capacity, and but they are supposed to do very well in FY27 and FY28, but we'll have to watch for that. So they are expected to do around 4,385 crore of revenue in FY26. We'll have to see that, because they fell drastically short of around 1,000 odd crores benchmark in the last quarter only. So EBITDA margins are stable and are improving. EPS, they are expected to do around 22 in FY26 and around 31 odd in FY27. So I will take a mean of around 25. So at 25 EPS, at around 750 should be the decent level to buy this stock. So if you see this chart, this stock is in total bear market. So if you see this is the 200 EMA, this is the 100 EMA, and then the 20 and 50. So it is below all moving averages. As I told you, in my opinion, 750 should be a decent level to get this stock, but don't expect any great results. Earnings will come later. It fell because after the weak results, which came for the first quarter in July, it has fallen from that around 960 odd levels to around 760 odd levels. So somewhere close to these levels, one should look to buy this stock for long term, but it depends. A lot of issues depend on execution. The other stock is Axiscades, a very interesting company. This company is basically transitioning now from a ER&D company, which was into software development and product development, into actual suppliers of products. So it's a technology and embedded product development company with 30 years of experience in aerospace, defense, and ESAI. ESAI is embedded systems and AI integration, offering end-to-end solutions from concept to certification, making them a trusted partner of global OEMs and tier 1 suppliers. So they are into aerospace, aerostructure design, metallic and composites, defense. They are doing, I'll show you, they are doing a lot of capex in that for getting into UAVs, missile subsystems, etc. ESAI, chip to product, hardware, software, cloud, IoT, etc. Semiconductor support, designing, simulation, etc. and others, engineering and other automotive mechanical designs and other issues. So it's a full stack engineering R&D company that enables end-to-end development of hardware and software systems from concept design and testing to embedded software development and system integration. It's doing a strategic shift, moving from a traditional engineering service provider to a product-driven, non-linear technology leader. So it is now getting into the domain which is right now held, where there are other companies also for defense, like Data Patterns, Astra Microwave, Apollo Micro, etc. So in core domains, aerospace revenue grew by 7%, defense revenue grew by 22%, and ESAI revenue increased by 34% as compared to Q1 FY25. Now they are guiding for around 30 to 40% revenue growth, depending on their order book. Non-core domains, which includes heavy engineering, automotive, and energy, continued to experience a decline of 9% year-on-year, attributed to slowdown in automotive sector and timing orders in energy. Q1 reflected significant order intake in defense vertical, which is expected to accelerate in the coming quarters as a result of enhanced procurement action by Indian defense and global OEMs. So what they have been doing, acquisitions, is very interesting. So they acquired a company called Mistral Solutions, brought in capabilities in high margin segments like defense electronics, embedded systems, and aerospace product design. Similarly, acquisition of Ad Solution GmbH in Germany provided access to the European automotive embedded systems market, especially in e-mobility and ADAS, which is Advanced Driver Assistance Systems Engineering. In EW Systems, the company has secured one confirmed unit for LCA Mark 1A and 80 confirmed units for Su-30 aircraft with per system value of 2 crores, implying 160 crore revenue visibility. Now, it has active partnership with a company called MBDA across launcher maintenance, embedded software, and test benches. The firm is participating in the Seeker opportunity for BrahMos, with an RFI received for Seekers priced at 1 crore per unit with a market potential of 100 units per year. The follow-on opportunity in the Kusha Seeker program, 5 crore per unit, is expected to align with the BrahMos outcome. The supply chain, engineering services, and aerospace manufacturing division support global clients such as Boeing, Airbus, GKN, Spirit Aerosystems, Airbus Helicopters, etc., Rafale, etc. Unmanned systems portfolio covers a wide spectrum from counter-drone systems, man-pack, man-portable, vehicle-mounted radar, jammers, spoofers to more advanced assets like kamikaze drones and bomb-dropping UAVs. So they are trying to get into that. In land systems, it works on tank transporters, turret systems, and ATV, that is all-terrain vehicle components, while also developing C4I2 systems, integrated command and control suites for land-based platforms. Within naval systems, it has delivered sonar technology and is working on integrated control systems for SSK. That's a diesel electric submarine, 5 units, P-75 6 units, and Scorpion 3 units via Mazagon Dock classes. It says, I'm 100% not sure, of around 5,310 crore of confirmed order visibility over the next 5 years. Rupees 2,790 crore in defense. So what they are now pivoting more towards defense production. 720 crore in ESAI, embedded systems and AI integration, that is basically semiconductors, and 1,800 crore in aerospace. So it's a company which is in transition. Now, coming to their quarterly performance. So revenue were up 9% in rupee terms and 5.9% in dollar terms year on year. So nothing great growth, etc. EBITDA margins have improved from last year. So from 9.8, it has reached 10.1. PAT margins, etc., have also improved, and profit after tax grew around 24% because of better margins. Now, revenue by domain. So if you see Q1 FY26, energy, HE and auto is still okay. ESI is 16%, defense is 24%, and aerospace is 35%. So they are now equally into various sub-segments of the business. By geography, so if you see here, USA is 27%, Europe is 37%, Canada 4%, and APAC 32%. Now, facilities in progress. This is interesting. They're creating a 160,000 crore square facility near BIL on 2-acre land. So positioning as an ESAI hub under ACT. Then unmanned warfare center, Bangalore. So they are creating a 15,000 square foot facility on 1-acre land, ideal for drone activities, etc. So there they are positioning for as a global capability center for unmanned warfare. And you know how important the UAVs things are nowadays. Then at DSC Bangalore, integrated platform for global defense collaboration. So these are their kind of works in progress where they're trying to create these facilities for various projects and various products they are likely to build. Now, if you see here, they have been gradually increasing their year-on-year revenue. So it has reached around 1,000 odd crores now in March 25, and it is growing. Operating margins have also improved, and net profit has improved. So they did around 17.63 rupees EPS in FY25. In FY26, considering even if they do around 25 rupees EPS with the kind of growth they are showing, 25 rupees, 23, 24, 25 rupees EPS, pricing them at around 50 times should be a decent level to enter this price because they are in these high growth sectors, but it all depends on execution. So in my opinion, 1200 to 1250 should be a decent level to get this stock. Now, this stock went up, then it corrected, and now again it has started moving up. So wait for some dips. I think there is some news about they are likely to do some tie up with some global company, etc., for manufacturing, etc. But on bad days, look to get this stock in that range so that you can take advantage of the upside. But there's a lot of potential. Everything depends on execution. I have finished. We'll take questions now.